Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick. On the show today, we are talking about Wells Fargo seems to be the story of the day. We'll talk about that, the sell-off on Friday, and we'll talk about a couple of earnings from today as well. Our guest, Craig Johnson, Senior Technical Analyst at Piper Jaffray, would join us at 8:35. Joel, tell us how we're doing in the S&Ps.
Not very well at all, Spencer. We're trading down 14.5 handles here at 27.42 in a quarter. A lot of news overnight, Friday after the close. We'll get to that. But just recapping the S&Ps, your opening tick was your high tick for the session at 57 even, went down to 33 even. That takes out your Jan 8th low. Below that pre-market low, we got another 10 points on the downside to 23.75. Number I was looking at last night was Soho, and this morning 45.75. That's mid-range on the session. Crude trading in the red as well here by 63 cents to 64.82, but still crude having a good year overall. Now looking at the gold market, a little flight to quality here, but not much. Gold trading in the green here by $1.50 at 1338.90. Can't really clear that 1350 level. Dennis, good morning to you here. Finally, some fun markets. Finally, something to talk about, right?
Again, though, you neglect to give us the Bitcoin price.
Oh,
come on. Just because you sold Bitcoin, you're all out, doesn't mean it doesn't exist anymore, Joel. Let's get into the world here of crypto for just a couple of seconds and give us a little bit of the crypto carnage over the weekend.
More crypto carnage over the weekend. Trading now under $8,000, trading down 11% at $7,762.29. Ethereum down 12.5%. Ripple down 13%. Bitcoin Cash down 13.5%. Cardano. I know you're heavy into the Cardano because it kind of sounds.
Cardano. I've never heard of that one.
It kind of sounds Canadian. That's in the red by 18%.
Cardano,
Yeah. You go to number 15, Tether. And that's trading in the green by 0.07, but that's kind of like the Bitcoin T-bill. But yeah, I'm not paying much attention to it, Dennis, and got flat. I want to wait for like that $2,000 or $3,000 down day, you know, where they take it under 5,000, 3,500, 4,000, and then maybe redeploy. But
you might jump back in on the long side.
Oh yeah, yep.
Joel's a trader. He'll get back in there. Joel trades. You got to follow Joel because he was all over that Bitcoin. I tell you, nobody made the money faster than Joel. He bought it at 7,500 and sold it 15,000 like 3 weeks later, man. You were like the best Bitcoin trader out there. So
well, I sold most of it. I used a mental stop at 9,500, but when it was hanging over 10,000, I was like,
yeah, you got rid of the rest of them.
Yeah,
that was a good call to get out when it broke through 10,000 because when it broke through it the last time, it's been straight down ever since. But this is not a crypto show anymore. We've moved on to bigger and better things. We now have carnage in the market as well. Friday was an absolute disaster for pretty much every stock out there. Reuters reporter called me and was just saying, where is the money going? And I'm looking at my screen. And, you know, for the last 3-4 years, we've been saying there's always rotation. There's always a stock or a sector picking up the slack. There was nothing picking up the slack on Friday. I looked at my S&P screen. Almost every single stock was trading in the red. Bristol Myers was trading in the green, but it was due to report on Friday and actually reported good earnings, which we'll get to here in a second. But you had gold trading down. You had utilities trading down. You had bonds trading down. You had everything trading down. So you think, oh, what the market carnage it is, that gold would get a bid. It did not on Friday. It was trading down as well. They were stuffing it into their mattresses. That's where the cash from the market was going on Friday.
And Dennis, you probably need a pretty big mattress there to stuff all your cash in there. But it's the truth. It's the truth. I mean, you always see that rotation, and the rotation wasn't there. I mean, big reversal in Apple. I mean, that's your top component. They hit Google. That's a top component. how the heck we let Amazon get anywhere near 1,500 is unbelievable. But you know, a lot of money coming out of the market and not being redeployed. That is a concern at this point. But on the other hand, you probably got thousands, if not millions, of day traders out there and investors saying, this is exactly what we need.
Licking their chops.
Yep. This is the time to redeploy some assets here. And I don't know, the people that thought that Friday night have, you know, second thoughts here this morning. We do have some really big news. And I think this has to be the biggest news in the banking sector. I can't even think of something like this. Spencer.
It's a whale trade at JP Morgan.
Yeah. When was that? When was that? I mean, is this going to be the same kind of, we'll talk about this in a second. That was a great buying opportunity at JP Morgan back then. But Spencer, what did Janet Yellen do going out the door?
Yep, she for the first time ever, I believe, the Fed is capping a bank's AUM. So they said that Wells Fargo was not allowed to grow past its $2 trillion in assets that they had at the end of the year until further notice. They have 60 days, Wells Fargo does, to present the Fed with another internal cleanup plan. But their AUM is capped at $2 trillion. They have until the end of the year to relieve 4 board of director members of their duties. And it seemed like she's just going out with a bang.
This is all going back to those account scandals from last year, right?
Yep, all going back to that.
So this is now, and everybody had forgotten about this, obviously, because we haven't heard about this, anything really to do with this in the last year. But Yellen going out the door with a bang and knocking Wells Fargo down $4.50 here this morning. This is a huge move for Wells, because Wells is typically a more, at least, you know, it's one of the banks that has a lower beta. You know, Bank of America moves around a little bit more, but really when you put in perspective, I mean, November or December, Wells Fargo is $56. It ran to 66. So it was a nice run up in the last 2 months. Well, with Friday's sell-off of 2 points, plus the 4.5 points it's losing today, you're right back to where we were in December. And if you really go out on the monthly charts, I mean, Wells Fargo was in a trading range, and it did break out from it, obviously, when it broke over 60. But between 2014 and really 2017, you could say the stock's between 45 and $60. Finally broke out there in late November, and we haven't looked back until the last couple days. Now we get back into that range here again. What do you think, Joel? Do you think there's some underneath demand? Do you think there's some people licking some chops, or because this news is so, you know, unprecedented really from the Fed, is this going to be hands off on Wells Fargo?
Well, a couple questions immediately come to mind here. And, you know, number one, Janet or Auntie Jeanette, as Fari would say, she did this going out the door, right? And, you know, didn't need approval of any of the board members. Right. So what happens when, what's the new guy's name that's coming in?
Spencer?
Yeah,
Joel
I'm
blanking on it, but I'm
I am too, actually. Isn't that funny? We're in such a bull market, you know. We're I'm blanking.
Jerome Powell.
It must be from Super Bowl hangover. What's his name?
Jerome Powell.
Okay, there you go. Yeah.
So,
he's not in the news. How am I supposed to remember?
So, I mean, one reason I would not be short in the stock here, you know, I mean, obviously there's going to be some pops here. But what if Jerome comes in, when's his first official day or whatever, and says, I mean, if Janet Yellen has the unilateral power to slap these restrictions on it.
They just don't do that.
Yeah.
The Fed chairs just follow suit. They're, you know, look at, you know, from Yellen, Greenspan, you know, over to Bernanke, over to Yellen. They just don't do that. They don't change the policy that quick. They don't. So you're not going to say, oh, she doesn't know what she's talking about. Let's undo this. I think 0% chance that happens. They're going to have to follow suit with whatever the Fed wants.
Also, today, he's sworn in today. So today is his first day.
So today, okay. Yeah. And, well, that would be a fun press conference here. I wonder what the first question is going to be. All right. So then I am sure.
What are you going to do to stop the market from going down?
First...
Are you going to lower interest rates?
What a first day, man. I bet she's calling in sick or whatever. But, all right, so let's just give the short term, you know, the absolute fallout. It got hit on Friday. This morning, they took it down to 57.35, and now they're bouncing.
57.35?
Yeah. Yep.
Oh, man, they overshoot these things. So It's already bouncing. We're already on the bounce. Show us that pre-market chart.
Overshooting, Dennis. I mean, if they can't grow and they can't increase assets and supposedly what a great interest rate environment that's coming on. I mean, that, who knows? Maybe 57.35 might be a good sale in a week.
And it's not that they can, it's that they're not being allowed to.
Yeah,
That's kind of crazy.
Yeah. I keep an eye on $60. That's
Big
a nice
goal,
number.
psychological number.
Yep. 60.08. That's the highest you've been since you traded 57.25. I think we'll spend a little time over 60 here, just to, a rally. But man, you got a long ways to fill the gap from Friday. Let's go to the daily chart and take a look at that.
Overnight,
yeah. I mean, there's just a lot of damage here. Yesterday's low, back at 64.07. But, instead of trying to pick, a top or a bottom here today, I'd like to see what that closing price is today, whether it's 58.80 or 60.20 or 60.80, because, some people with big positions, big money in this stock are making some big decisions today. And if you've been in this stock, like Mr. Buffett here forever, I mean, you're not selling at a loss. I mean, yeah, you're selling at a loss from the all-time high here, which it hit just last month at 66.31. But what have you been in this thing since the financial crisis when it went into single digits? Or you bought this thing in 2013 or bought this thing in 2014. I mean, you're still sitting on some tidy profits here. So just to think that just going to bounce right back up is a fallacy. There's a lot of people that are going to be reevaluating their long-term position in this issue.
One thing I've learned, I've learned it the hard way in my 19-year trading career, is I never buy on bad news. And we're just speaking about bad news here, not market overall action, like not macro action, but on specific company bad news. It never seems like the play to buy it on day one. Let the dust settle, because so often there's so much follow through. And we have so many examples of this. I mean, Celgene had, the bad news of their one drug, and then, it went from 140 to 120, then it consolidated for a few days. And then, I think it was something else. It may have been earnings or something, but that falls another $20. We saw the Chipotle incidents, obviously, multiple times where it comes in and, it started and it just continues to cascade. Lumber Liquidators was the same thing on the way down. Valiant was the same thing on the way down. Buying on day one always seems to be the wrong move. Like, there's going to be times where it is the right move, but it seems like if you're trading, and as traders, we're always trading the percentages. The percentages are to lay off, let the dust settle, wait for it to do some type of consolidation, start to actually get the momentum on your side again, and then pull the triggers. So tempting to come in. I even have to stop myself sometimes, because I'm underweighted in financials. I've been underweight in financials for a while, and I will think, oh, Wells Fargo, $4 off, man, that would look good in my portfolio. I think it, eventually could come back. And I do think that, but let's let the dust settle, because we don't know, if this is going to have continued fall through. We haven't even had a regular session of trading here yet to tell what the big institutional money is going to do. This was announced after hours on Friday, when everybody's taking off early, getting ready for their Super Bowl parties. Pre-market action, we've had 570,000 shares. The institutional money hasn't even spoken here yet. So let's see what they do here. But wait till, what I always say is wait, at least until the dust settles a bit, and then pull the trigger. That's what I've learned in my 19-year career.
And just one other question for you here. They're dragging down your JP Morgan. That's trading down 1.6%, a little bit more than the market. Specific problem here to Wells Fargo. I mean, there's the one that, got slapped with it. You just have to think, Yellen's just making a stance here on this issue. You think it might be a benefit for some of the other banks, to
you could argue that.
Yeah, you could argue that. Market's not exactly showing that this morning, but
market is hitting everything here this morning, though. So, and if I do look at my screen, I'm telling you, like utility stocks are even down here this morning. So it's continuing just the action that we saw from Friday. And, moving back to the market talk, I mean, we talked over the weekend too. We talked Friday night, Joel, and I came in short today. Why? Because 2-day move. And this was a slam dunk trade. Basically, when you see carnage like that so often, especially going into a weekend like that, people are looking what happened on Friday. Like the people who have day jobs, they come in Friday night and they see what the hell happened to my stocks. What do? Monday morning, they panic. They're sitting on all these profits, and they call their broker, or they go onto their online brokerage account and they place orders to sell. That's why you so often see follow through after a big day like that. Now, just speaking of the percentages, you often see a bounce, and Spinner was talking about a bounce in the chat earlier here this morning, and I agree with him. Often, about 30 minutes to 45 minutes after that opening carnage, you start to see the market stabilize and then start to catch a bid. So there could be a trading opportunity from the long side here today. But the easy money, I think, was shorting the futures or shorting stocks overnight, and then maybe covering them here at the open or slightly after the open. And I've already covered a lot of my stocks in the pre-market. I'll tell you why. Because the S&P futures on SPY, if you look at it, it's only down $1.45. A lot of these stocks are down significantly more than 0.5%. So SPY is down 0.5%. Your futures will obviously coincide with that. But you look at individual stocks. I mean, McDonald's is down $1.50. You've got Coca-Cola trading down 0.8%. I mean, a lot of these are just a little bit maybe overdone for where the SPY is. So one of two things is going to happen. SPY is going to start leaking here a little bit, or these stocks are going to start to come back. So the stocks that I was short, for the most part, I've covered. I'm actually looking to potentially initiate some longs, but I would hedge it against the SPY. So, if you're seeing certain stocks trade a little bit too low, sometimes you can pick those up in the pre-market and maybe flip them at the open for a trade.
And what was the exact time on that announcement, Dennis? Because I know that they whooped up on the spoot. This is really interesting here. The spoos were weak from 4 to 4.15. We like to watch that price action, right? We skimmed another 3 or 4 points, but she waited to do this. I'm seeing here on CNBC site at 6:21. So she knew the spoos were closed. She knew the market would not be able to react to it on Sunday night. And what's really Friday night. And you know what? People must just have forgot about it. And they, must have been at their Super Bowl parties, because even though you had a close at 56.75, this is the after hours session. Yeah. It opened to 57 even. I mean, it basically
opened on Friday night flat. Sunday night flat. Is that what you're telling me?
Yeah.
The 6 o'clock, 6 p.m. That was crazy.
Yeah. Yep.
Yeah, that's crazy that they opened flat. I wish I would. I was at my Super Bowl. Yeah, I was at my Super Bowl party as well there. So I wasn't paying attention to the 6 o'clock action. But if you were sitting there at the keyboard at 6 o'clock on Sunday night, last night, you could have got short the SPY flat or the spoos flat.
Yep. Well, that's incredible. It was also, you would have been selling it at a discount. We went out at a big discount to cash. So you would have, the definition of shorting in the hole. But that's a kind of trade that, okay, I'll short the open here. If it goes 2-3 points against me, I'm out. I gave it a shot. But how are you feeling this morning if you're a Qualcomm shareholder?
Well, Qualcomm is very interesting story here, and this is your other big story of the day. And Spencer, give us the details here, and Joel and I will break down the action.
Broadcom has presented their best and final offer for Qualcomm at $82 per share. That's $60 in cash and the rest in stock. And they're also willing to provide the regulatory ticking fee and some other fees to go along with it. They said this is their final offer for Qualcomm.
It's incredible action here this morning. And on this initial news, when this news was dropped this morning, where did Qualcomm go, Joel? QCOM?
Yeah, you got a pre-market low under $63.
No. We spiked on it.
First, I thought you said
the right low. Off the new. No, I don't care where we are now, because that's what I want to tell. But where do we go? Which you would think it would go up on this news.
73.50.
73.50. We went to 73.50.
Yes, Dennis. 72.
Wow.
Yeah.
Wow. So we go from 66 to 73.50. This is just announced on the wrong day. Yeah, at least for Qualcomm shareholders, because here you go. You got another better bid. I think the last bid. Where's the last bid, Spencer? 75? Do you remember the last one? Spencer did some hunting in the pro.
60. The last offer.
The last time they bid, this was like 3-4 months ago. You got to go digging in the pro here a bit, but they raised the bid here. So up to 82. So you think, oh, boom, 66 is an 82 offer on the table. Boom, you start buying it up in the pre-market. You are wrong in this tape, because they are banking that Qualcomm rejects this offer, that it's not going to be good enough, and that's why the stock has turned to the red and turned hard. So we went from 73.50 in the pre-market action here this morning, all the way down to what, Joel?
That was the number I was going to give you initially, 62.84.
10-point range on this news. We're only down $1 here right now, but there was money to be made just fading that pop this morning, because and people are probably scratching their heads like, there's an $82 offer on the table here. Stocks is 64. What's going on? because Qualcomm rejected the last one, and this one isn't much better. So they're banking that Qualcomm is going to reject this one as well. So, and I don't know if there's other suitors. Obviously, the market thinks there is not, because the stock would be trading a lot higher if the market thought there is. So here we are, we're trading down. Now you got to analyze it though, and you got to analyze this market action. And the market can be wrong from time to time, especially in tough tapes, which we have this morning with the market overall. So we're at 64.90 pre-market. There's a potential 82 bid on the table. If Qualcomm says yes, stock could go up to $82. Odds are they're probably not going to say it. What was the last one?
The last bid was $70 a share.
This is a lot better bid then, 70 to 82. This is interesting. So Qualcomm is still obviously going to decide if they're going to accept this or not. If they do accept it, it's a huge, money maker probably for everybody who buys it at 64.80 right now. If they reject it, the question is, when these news, and you always like to say, where did the stock come from when the news and the rumors originally started, or when the original bids came out? Stock was around 50, really around $52, $53, and there was rumors for a couple days, and then you had the official bid, I believe, back on November the 3rd, when the stock spiked from 55 up to 65 bucks. So now you look, okay, well, is it going back to 55 if they, refuse, if they reject the deal? I don't know, because you've had a tech rally since November as well. Even, and value tech has rallied too. I mean, Seagate is a great example of value tech, where you got the lower multiple, the higher dividend. Seagate, not that they have anything to do with each other, I'm just comparing it as a value tech play, has went from like 37 bucks up to 51. It's been a big rally. You could probably argue that if Broadcom bids never existed, that Qualcomm is probably higher than 55 right now, just because of what the market and the tech stocks and the value tech did overall. I'd argue that Qualcomm would probably maybe even be trading 60 or 61 without a Broadcom bid. So you're at 64 here right now. You start to analyze risk return with an $82 bid on the table. They reject it. Maybe it goes down to 60, maybe 59. If they go for it, 82. Question is, now you have the macro tape and the NASDAQ tape, and they're hating stocks, all of a sudden here in the last 2 days. Now, does that mean if they do reject it later on today that it goes down to 55? There's a possibility, because it's just in a bad tape right now. But I don't know. I don't mind the risk return here at 64, but it's still a little bit of a coin flip.
64.76 is where it's currently trading, and there's a lot of fundamental information to digest there that Dennis just went over, which is way above my pay grade here. But
all of our pay grades.
But $64. I mean, I don't know what is happening with this deal. I look at this as what's happened since the last serious rounds of negotiations, and 64 has been the number. I mean, it's got under 64, 1, 2, 3, 4, 5. I call it 6, 7 times. You went through it this morning. You went down to 62.54. You're back above it now. So for me, whether it's an intraday, a scalp or a trade, 64 is really important, because there's nowhere to hide after that. You see a little bit at 62, and then you have the probability of it. It was around the $52, $53 area. So, to me, I mean, just from a trading standpoint, that's my bogey for that. I mean, I'm not touching on the long side or short side, but 64, just very important number moving forward, not only intraday, but also on a closing basis.
I mean, that's why Joel, he's good. He's got his technicals there, and Joel sticks to his technicals. We know I mix around. I got the technicals. I go the fundy analysis. I do a little bit of everything. I like order flow. I like to get sentiment in there. I do a little bit of, everything. Joel sticks to his technicals a lot of times on his trades. And a lot of times, a lot of this other stuff you can get lost into a certain extent. So sometimes it's just good to stick with the technicals. And he's pointing out a big level. You're right, Joel. $64, it's held for pretty much the entire month of December. So I guess as long as that holds and you're buying here in the 64.5, well, if you're saying I'm going to stop out at 63.5, you risk yourself $1. If that holds, and all of a sudden, if they decide, that there's more of a chance that they might accept this bid, you can get a pop. But there is fundamental news on the table here, so don't expect, that technicals are going to, to take, the front seat here. It is all going to be about whether Qualcomm accepts it or Qualcomm rejects it. If it rejects it, I think we're under 60. If it accepts it, obviously we're going to move up to closer to $80. So the market is banking that they're going to reject it. And even if you look at AVGO, the action there this morning is trading in the green because the market is banking that, and they don't want, obviously, Broadcom to pay that kind of premium. So Broadcom's trading up because they think they're going to reject it as well. So market's banking on a rejection here. It's probably, the market has often got these things figured out ahead of time, but risk reward isn't that bad at $64.
Real quick, I want to cover for BZ Tokyo in the Google chat here, asking about Fiat Chrysler. A big dive on Friday here. I'm
Wow.
looking amid report they could see major fines related to emission issues. That came out at a great time, 352.58. So you had a little people nervous on the close. They knocked it down. The only thing I could really say about this one is, man, just one heck of a mysterious run here. I don't know if Marcioni was talking about a merger or takeover, but this thing has gone from $10 recently up over 20, nearly to $25 here, bouncing back this morning. I'd keep an eye on that closing price from Friday. Where was that at 22.30, trading up a little bit in the pre-market, but that's a rumor, and they hit it on it, but we'll see how that transpires. But just remember, the stock was just over $10 back last July.
Overall market is bouncing here right now. So you've got buy the dippers coming in here in the pre-market as well. Stocks are still weighing heavy here, so it's interesting. We're going to get the imbalance data here in 3 minutes, so we'll have to see, if they're going to go buy. And the imbalance data is going to move the stocks, and it's going to move the market overall. If you see a lot of sell imbalances coming here across the board, you'll see the futures take a little nosedive on those 830 numbers. Obviously, there's a lot of buy imbalances across the board. The futures are going to rally. So be careful here if you're trading SP futures at 830, because that stock imbalance data is going to move the overall market. I know there's a lot of futures traders that don't believe that, but in this market tape right now, when stocks are all crazy, the stocks and the futures, sometimes stocks lead, sometimes futures lead. I'll tell you right now, stocks are leading.
Yeah, I agree.
And that's just,
yep, I agree with you on that one.
Yeah, and you have some hardcore futures traders. I've got some arguments even on Twitter before and saying futures always lead. What are you talking about? It's just not the case. I mean, during the flash crash when stocks are tanking, the futures are trying to play catch up with it. They were even, sometimes, when you're looking the action overall, it's all about the arbitrage between the stocks and the futures. And when you can buy at a discrepancy, you're gonna be buying stocks, selling futures. So if stocks are really weak, you're picking up the stocks and then you're selling futures against us. So that's why stocks are leading. Futures take off, you start lifting the stocks. It's just pure arbitrage, the arbitrage that happens in the market every single day that keeps everything in line. But there's often, it can be either leading. I'll tell you right now, it's 830 data is going to move the futures. So we're gonna give that to you in a minute and a half right off the hop. But let's, in the next minute here, let's get the Bristol Myers report in here, Spencer, because we haven't even given an earnings stock here yet, and we are still in earnings season. BMY trading up 3% in the pre-market. How'd they do?
Q4 adjusted EPS 68 cents. That beat by a penny. Sales of $5.45 billion versus $5.35 billion estimate. So good numbers there. As far as guidance goes, fiscal year EPS guidance coming in line. The range is in line at least. They also announced the phase 3 data. Phase 3 data for their checkmate 227 met its co-primary endpoint. So some positive drug data there to go along with the decent earnings report.
It's a nice pop for Bristol Myers here this morning. It's hard in this tape and this recent weakness here to be buying stocks that are trading up $2.50. I know you got the 66.10 level there, Joel, from back in October. That's maybe the bogey you're looking at above there. You start to get into a gap area. So I would say, if it starts to get above there, it gets a little more interesting. But how do you come in here buying a stock, trading up 4% in this ugly macro tape?
Well, it got all the way to 67.88 and 7.8.
Wowzers.
Yeah, wow.
People overshoot, man.
Yeah, but settling down now. You're making some lower highs here. So that's 67.80. Maybe a little bit out of the question here. But let's go to your dailies. That's where your size and your institutions are going to be. You're clearing this nice gap area. So you're getting in a gap that started at 66.10. That's your bogey. You are trading right there right now at 66 even. But let's see. I mean, if you're holding out for a gap fill, you're going to need to get all the way to 74.57. I just think there's going to be some work to do before you get there, but I like that number. I don't know if I'm shorting it at 66.10 off the hop, but if it goes 66.10, runs to 66.70, and then boom, comes back down through that opening print, maybe take a look at it. And the other thing which we should have been keeping an eye on, Dennis, this Merck, remember it got that pop off that news, got all the way up to $64.
Yeah.
Doesn't that a stock like that
always seems to give it back.
Yeah.
We said it on the show that day.
Yeah.
When you get this drug news, it seems to always give it back. And Bristol Myers got the beats on that number too, the Merck number, because they had the competing drug, and that was the buying opportunity. So yeah, it's been fading, that drug news. What are those two drug names? The Merck drug and do you remember? Joel's got the good memory over there. I'll throw you under the bus here.
Optiva or something like that.
Optiva.
And
that's the Merck one.
Yep, that's
and
the
then
Merck one.
Keytruda.
Yep. Keytruda.
See, Joel, he got that memory, man. That's why we pay him the big bucks over there, because he's got that. I never remember these drug names because they don't come up with normal names. So I guess you can pronounce those ones at least. But every time they seem to get key drug news and they pop 3-4% on one of those, it's a fade. Or they drop, then it's a key drug news that's not good, and they drop 3-4%, it's a buy. So I'm fading that news all day, all the time.
And if you subscribe to channelingstocks.com here, you've been in the trading range from 60 to 65 here. You hit 65, part of it early in that part of the trading range, but man, 60 to 65 has been the range. Dennis, we crossed that 8:30 a.m. threshold here. How the imbalance is looking?
There is sell imbalances. They are mixed. Some are big, some are not that big. So it's not really anything like, whoa. And, futures actually rallied a little bit on that because I think they were expecting maybe these sell imbalances to be worse than they were. There are some big ones. The financials are going to be, the laggard here today. We know that with the Wells Fargo data. Wells Fargo already showing 568,000 to sell. Stock is trading at $59. Again, got up to that 60 where we were talking the pre-market goal.
Look at that.
And turned around again. You're right. That $60 level seems to be resistance here, at least now, at least early trade. Bank of America, it's rallied off the lows, but 616,000 to sell here in Bank of America. Citigroup, 58,000 to sell. JP Morgan, 60,000 to sell. Those are significant. Alibaba, 102,000 to sell. So even Alibaba, with all its buying balances, got not in this tape. Alibaba, 102,000 to sell. I can't really find anything with a buying balance. Nothing major, anyways, jumping out at me. But Twitter, 68,000 to sell. Twitter didn't have a great day on Friday there either. Obviously, nothing did. But actually, you know what? Twitter's day wasn't that bad. It was red, but it wasn't that red. It is down significantly here. There's probably some underneath demand, I still think, in a stock like Twitter. AT&T, 434,000 to sell. That's significant for AT&T. A little bit of a defensive stock, but not in this tape. The AT&T was down $1 on Friday, following suit a little bit here this morning, trading down another 30 cents in the pre-market. So there's sell imbalances. They're significant, but they're not like blowing me away. Like I can give you some small ones, like Prudential's 5,000 to sell. You got like McDonald's 19,000 to sell. That's what it would be down on a normal day. You'd see like, if we were down like 3 or 4 S&P points, you could see 19,000 McDonald's to sell. So there's definitely some sell imbalances and some issues, but a lot of them are relatively small.
Kim, just before we go to our break here, get a question here about Win. And boy, a lot of news in the stock last week. We had talked about 160 and 160 that filled the gap area that held. You rallied back here. I mean, still a lot of news out here. You still don't know what's going to be happening. A lot of people are saying, oh, well, even if he steps down, he could sell it for $200. I don't know. Still a lot of news out there. It's trying to recover, almost filled the gap. You got to 176.88. So I think for now, obviously you got to hold on to that 160 level. I'd just be looking at this pop here. What was the low there? Let's call it 161 to 172, 11-point move, 5.5. Right where you're trading at now, 166, 166.5 really needs a hold in there, and this will be subject to news. Not a big bounce after a big decline, so still waiting for fundamental information on Wynn Resorts. There
could be another headline if he gets charged again or somebody else comes forward. That is all your headline risk here. So I'll say in this stock, you have headline risk all over the place. If you're buying it for a technical trade, I think I want to be trading it intraday because, something can happen. There could be, other news coming out and that's going to move the stock in either direction. Maybe, there's allegations, that, or people coming out to defend them, that would help the stock. But right now, there's a lot of unknowns around WYNN, and that's why I'm hands off. The technicals are telling me it's kind of heavy. I was just looking at technicals, no headline risk. We've bounced multiple times back in the 170s, but we keep coming and getting dragged back in the 160s. That's telling me that there's institutional sellers selling the bounces every single time. So if that eventually starts to overpower it, then you got to look out. If this thing went under 160, that would be problems. So right now, jury is out. Dust is still trying to settle here. We're trying to see if this is going to be a big deal for Wynn Resorts or if it's going to just be something that, we're going to forget about and eventually this is going to crawl back to the highs. But market is still saying there's a lot of unknowns. That's why there's weight on the stock.
Okay. Spencer, we got a guest here, 8:35.
We do have a guest, Craig Johnson. He is a senior technical market strategist at Piper Jaffray. We'll be right back with Mr. Johnson.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we are joined on the line by Craig Johnson, Managing Director, Technical Market Strategist at Piper Jaffray. Craig, how you doing this morning?
We're doing well. It was a fun Super Bowl game last night.
Did you go?
I wish I could have gone. I instead partake in all the festivities, but did not go to the game itself.
Yeah, and the city of Minneapolis holding up there with all the Philly fans celebrating. Everything okay there?
Everything was good, and it's a good reason with all the fans from outside Minnesota to watch the game from home.
All right, so here we are with the market showing some major red this morning, and you made a bold call back here on January 18th, or actually a few days before that, and you just got a little nervous. You were just looking at different factors. Tell us about the different factors that you were looking at in the market that were coming together. You weren't running scared or anything, but just to make you a little bit cautious on the market.
Right. So back around the 16th of January, we titled a report called A Hop, a Drop, and a Pop. And, we're still believers that we can get to 2850 by year end. But in the near term here, things that are concerning us are as follows. Number one, the stock market had basically gone parabolic. If you pull up a chart of the Dow or you pull up a chart of the S&P 500, you'd seen this kind of acceleration. And then you start seeing the money flow numbers. Over the last 2 weeks, guys, we had $50 billion come into equities, according to Lipper and other services like that. What I was also seeing is just how far stocks in the Dow were above their 40-week or 200-day moving averages. And you went back and you started looking at cyclical stocks. And when I say cyclical, think about this. Caterpillar, Boeing, these kind of names, they were more than 40% above their rising 200-day moving averages, which is crazy. You look at stocks like Amazon, you're very similar extension above your 40-week like you had seen back in 2013 and also 2015 and that kind of period. So to me, I see a lot of great companies out there, but they just don't look like great stocks. And that was what was making me nervous. And when I literally went back and I looked at the Dow and I started doing some quick math, I saw, wow, there's 25% of the weight of the Dow that I wouldn't have bought back then and I wouldn't buy now. because they're too far extended. So those pieces there technically, and then also combine that together with, we were approaching one of the biggest technical reversals that we will have seen probably in our investment careers, which is the reversal of a 36-year downtrend in rates. And I just worry, can we reverse a 36-year downtrend in rates, not get a momentum response on that reversal, meaning rates moving up quickly? That was what caused the problem in 87, caused the problem for the taper tantrum, caused the problem in 2000, I think it was 4 or 5 also, when just rates went up too quickly. And that leads to losses in fixed income that ultimately spill over into equity markets. And then you also look at the HYG for high yield bonds. It's kind of rolling over. It looks a little bit distributional. So when I put this all together and then fundamentally say, market's baked in a lot of good news with tax reform, repatriation, and all these things, and the market's trading at 18 plus times forward earnings, is it really now the time to justify a 20 multiple to go to 3,000 or 3,100 on the S&P? And in my opinion back then and now is no.
All right.
So that's what I was seeing, guys.
Okay. I jotted down 3-4 questions here. First, just talk a little more definition of like the money flow and what the typical money flow has been and what that signifies to you. It's like, the money kind of getting in at the end, kind of like you had in Bitcoin when the big boys were selling. Explain the money flow. And then also, the traditional form of thinking, higher interest rates bad for the market. We were able to shrug that off for quite some time. Where's that benchmark in the 10-year where you think that things could really get hairy?
Right. Okay. So first, in terms of money flow, we had seen negative flows in equity markets for years. It's only been in the last, month or two, we've been starting to see some indication of positive money flow. But, at the beginning of each year, you tend to see a couple of weeks where there's heavy amount of, money coming into equities. And we definitely saw about close to $50 billion come in over the last couple of weeks. So when I see that kind of flow like that, it just worries me that we go a little too far too fast. And that's exactly what I think we've been starting to see happen. Okay, so that's in terms of money flow. Second thing in terms of money flow I would just mention is that when we often get money coming into equity funds, what we've seen for a long time is money was coming into all the passive funds and not coming into the equities. I still continue to see more money going into the passives than I do into the active management funds. So again, I think some of this parabolic advance we've seen has been, again, call it more passive money coming in. And that to me feels like it might be ill-timed in terms of when they came into the market. Now, your other question was about interest rates. And remind me again, just quickly, was it the speed,
where's your
or was
benchmark?
it the levels?
Yeah, just like your benchmark. Like, some people are saying 2.5, 2.6, 2.7. Nah, it's not even going to hurt the market at 3. I mean, do you have a figure where it's really going to, cause some asset reallocation?
Right. So let's put this into the context of history, right? So I don't think that this secular bull market ends until you get to a 5 or 6% 10-year bond yield.
Wow.
That's a ways away. What we're getting now is we're getting a reset in terms of this market. Okay. And to me, the level is less important as to the speed. I think right now we're at about 285 in the 10-year. I think we're going to go retest, 3% or slightly over that, and we're going to do it pretty quickly. And that's when the market starts to get pretty hairy. When I've talked to various trading desks, there isn't a big bid for 10-year paper or even 30-year paper at this point in time. Most desks up until last week were saying, oh yeah, we're at the upper end of the range. We got to be buying long dated paper. And it's like, whoa, wait a sec here. We got to put this into the context of the longer term trends. And I think a lot of people have missed that. So look for 3%. I said that we could probably see at the end of the year, the 10-year bond yield close at 3.25. But what I don't know is, do we hit that 3.25 from the bottom coming up or the top coming down? I don't know at this point in time. All I know is you're going to get a momentum response when you reverse a 36-year downtrend. And again, guys, that is the biggest reversal that I've seen. And there's so many new things that have happened over the last 30 years. ETFs, a larger number of hedge funds out there, program trading, all sorts of different things. I just, again, wonder how things function as we try to reverse the car from going, in reverse and now going forward with rates. And again, do we grind the gears here for a little bit while the reversal happens? You did in 87, you did in 2004, 5, you did during the taper tantrum, and it kind of feels like what's starting to happen again now.
All right. I just
not the end of the world.
No,
the end of the world, by the way.
No, definitely. I mean, we're still at unbelievable levels if you look at any time perspective, especially since the financial crisis. One other question, a question I always want to ask analysts and never get the opportunity. You made this call back in middle of January. The market was higher, certainly is higher now. And then, you made the run up. The S&P futures got to 2878.50. Now you're talking about, 2850 is your target. So is that kind of like your best case scenario for the rest of the year, is that we take back 100 S&P points and get back to that area? Or do you kind of feel like, well, that was your target, it's already been hit, so you got to be looking for more downside?
Again, under the context of the hop, the drop, and the pop,
okay,
I guess what I'm thinking is that we're going to make our money by being active managers by sidestepping some of this decline now. And I would not be surprised to see, again, a retest of that 200-day moving average. Right now, that would be 2532, but it is rising, so keep that in mind. But what I think is going to happen is we're going to come down over the next couple weeks or a month or so, 30, 60, 90 days-ish, and we're going to retest that 200-day moving average. We're going to achieve my 2850 objective by coming from down to back up under that kind of the hop, the drop, the pop, the hop, the drop, the pop, and we're going to get that final move toward the end, which will take us back up to that 2850.
Okay.
So we'll hit it from a lower number is my perspective. And the reason I didn't change it earlier when we did slightly go through it this year is because I just looked at all the extensions we were seeing of these stocks above their 40-week moving averages. And I said, I'm not going to chase this thing and be one of those typical Wall Street strategy guys that, my target has been achieved and I'm just going to raise it and not particularly take any particular perspective as to where we are or how far stocks are above. I mean, at points in time, you do got to raise your hand and say, we've gone a little too far, a little too fast. Even though it isn't popular, still needs to be done. And a lot of people don't want to do that.
And is there any level, you mentioned the 200-day moving average, or is there any macro event that would, change you from the camp of, hey, we're, this is the correction, this is, a dip perhaps to, reallocate things? Is there any technical number or any macro event that would, make you, leans toward a little bit more of a correction and is a major turn in the market from a bull market to a bear market?
Well, that is a awesome question. Here's the hard part. So when we raised a lot of cash in June of 2007, because we kind of saw the divergence between the market and the financials, I had no clue that the final resting number for the S&P 500 was going to be somewhere around the 666, right? No idea. I didn't think it was going to pull back that far or something that extreme. Similarly now, I don't know what the actual final resting number is going to be. I guess as I look at this and watch it start to unfold, number one, I'm not hearing any panic across trading desks at this point in time. So this is still calm and orderly. I would expect this to wash out in some sort of gigantic spike in volatility. I would expect to hear more pain on trading desks. I would expect to, see at least the 200-day moving average start to unfold. So I'm looking for that. I'm also looking for people to step up and perhaps see a bigger bid for the dollar. I'd be expecting to see more of a defensive set of, circumstances and charts unfolding. And right now, I don't see that. I see kind of a normal run-of-the-mill correction that feels like it's getting started, but has not really fully wound up and run its course yet.
Craig Johnson, Managing Director, Technical Market Strategist at Piper Jaffray, joining us here on Benzinga's Pre-Market Prep Show. Craig, it's always great to get, hear caution, hear a long-term perspective on the markets, and we'll be getting you on again here real soon. Thank you very much for coming.
Thanks. Have a wonderful day.
All right. S&P futures getting a little bit of a rally here. 950 trading down 9.5 handles, 27.47 in a quarter. Just, we spent a lot of time in this 27.47, 27.40 handle last night, and looks like we're going to do that again today. Dennis, any comments on Mr. Johnson's remarks?
I mean, lots of good points here, and it's just this market, and we've been on this relentless tear here, and it's been straight up for basically since the financial crisis. I mean, we've had some blips, but we've been straight up for basically 7 or 8 years. And if you look at that chart from 2012 to 2018, it's so smooth. I mean, yes, 2015, 2016, when oil was going down $27 a barrel, we had a little bit of issues, but, a 10% pullback. I know there was the Ebola thing in there too. There's a couple little things, but really even in the last, 2 years, if we just want to look at the last 2 years, it was straight up. It was straight up with no pullbacks. I mean, if you're a money manager and now you're seeing interest rates come up, the point the points that he's making, is this an excuse to take some money off the table? I think it is. And I think you're seeing, book some profits because there's so many people sitting on a lot of profits. Now, that being said, there's still a lot of money on the sidelines. There's still a lot of underinvested individuals out there. And that money will be licking its chops. I'm one of them. I've been underinvested in this market because I didn't think it could continue to do this. So, as a trader, I love the volatility. I love that. But as an investor, I've been underinvested for a while. We were talking about this last week, and you have been too, Joel. I mean, it's been a tough market. If you're underinvested, there has been the pullback to get back in, at least from an SPY perspective. So I still think there's underneath demand. I don't think we're going to turn around and, this is going to be the start of the bear market. I don't think we're there yet. I don't see it, and it's going to happen. Eventually, we're going to get a correction. We're going to get a bear market. We're going to get some significant pullbacks. But I'm still looking at individual stocks here and looking for buying opportunities. And until, that mindset completely changes, where you have every single individual saying, I'm not looking for buying opportunities anymore, I'm looking for selling opportunities, it's hard to get really bearish, even though, and we're talking a little bit longer time frame, even though the tape looks, like hell today, it looked really bad on Friday. It's still hard to get really bearish overall because let's put it in perspective. Interest rates are still very low relative to, where they've been historically. There's really, and that, when you look at it, what are you going to go throw your money in a T-bill at 2.5% or 3%, or the 10, not T-bill in the 10-year? I mean, that's a long time to tie money up for 10 years for 2.5 or 3%. So, and if you go to the T-bills, it's still next to nothing there. I mean, yeah, sure, cash can get you 1% now or 1.5% maybe if you're really working the cash, but really it's hard to, fight. Where do you go? Where do you go if you really want returns? It's the equity market. So I think there's still a lot of money that will come in if we get a significant pullback.
All right. Did we cover all of our earnings stocks here?
There's 3 others that reported. I don't know if you want to jump into them, Spencer. We had Arconic, which is trading in the red. Bristol Myers, we already talked about. It's leaked a little bit from where we were talking about it, but still trading in the green. We had Cisco, the food stock, SYY, and then we had HES, HES. All of them trading in the red here slightly. Where do you want to go?
Well, let's do Arconic. Arconic real fast. Q4 adjusted EPS there of 31 cents versus a 24-cent estimate and sales of 3.3 versus $3.1 billion. Guidance from Arconic coming in a little bit light on the fiscal year adjusted EPS guidance. The sales guidance for the fiscal year coming in higher. So mixed fiscal year guidance and a beat on the Q4 numbers.
It's still a tough day to report just because you got this bad tape. So they're going to try to gravitate to whatever negative headline. Just like 2 weeks ago, they're gravitating to whatever positive, they could out of a report. Now they're gravitating to whatever negative they can come in out of a report. So, bad tape, reporting on a bad day. Sorry, Arconic shareholders. I'm actually one of them. I have it from the old Alcoa position there. Straight down 4.5% here in the pre-market, $1.36. I don't know, thoughts here, Joel? We had a big breakdown day on Friday. Now you look at another 2 points off here. I don't know, 50% retracement maybe?
Just not a lot of volume here.
No.
Pre-market low, knocking it down here. $1.36. We got a pre-market low at 27.05. Have not been able to get back into that 28 handle. Your rebound high has been at 27.90. So keep an eye on that range as well. Going to a daily chart. I mean, this thing, after it did that split or went into two stocks, it just went crazy. So, I mean, I don't know how much the actual value of the company changed or not. It's kind of tough to do a retracement. I guess if you want to go from the 22 to the 31, that's 9's 4.5. That takes you back in the 26, 27.5 area. So
getting into that 50%.
Yeah, getting into that 50%. Really, really good. I see a series of lows at 27 even to 27.30. That's where you've stopped in the pre-market. So see if buyers reemerge there and you get a little bit of a rebound. In order to close the gap from yesterday, that's going to be tough to do. You need to get up to 28.83.
Let's bring up the Hess chart. It's an interesting one here. Give us the numbers, Spencer, and then we'll just dump into the technicals because we got some major support coming up if it falls a little bit further.
Hess reporting Q4 adjusted EPS of a $1.01 loss versus a 91-cent loss. Estimate sales of $1.296 billion versus a $1.31 billion estimate. So again, they missed on both of those numbers. They also announced a 2018 cost reduction program of $150 million. They're eliminating 400 jobs. And they also announced that's pretty much it. So those two headlines.
Stock's off $1 here. Actually, now it's off $2 here in the pre-market because I know you see a 47.01 print, but that was off exchange. It's actually offered at 46, and that would put it down to $1.80, and its best bid is 45.50. So we look like we're going to maybe open in the 45 handle here, at least if it was to open right now. All kinds of support down there in like 43, 44 area. Yeah. I don't think you're going to get a shot down there, but this is a crazy market. Sometimes you throw out a bid and you just say, hey, maybe if it gets down there, I get long. If I got down to 43, 44, I think I might throw some low ball bids in there just in case something gets silly. I think there's a good opportunity down there in the lower 42, 43, 44 area. Kind of a little bit early maybe here, but let's look at oil. And oil, is up significantly really since November. You can bring up the USO even if you want, 1150 in November. Actually, in December, 1150 up to 13. Been a nice run for oil. And Hess is, not running on. Now you're getting back to the levels we were. If you go out on a longer term chart, it's a stock that's really gone nowhere here. So if you're looking at buying something on the cheap or something that really hasn't run up like the rest of the market, this stock fits the bill.
And you got you mentioned the pre-market low just being offered at $46 here. I try and just go to the dailies and just find levels. And folks, 46.20, you are offered below there. That was your low on December 22nd. And then you got a precipitous drop here all the way down to 44.01. And then 43.15, a double bottom at the 43 with 43.03 is a low in there. And another low, wow, bunch of lows, lower 43 handles where I'd be hanging out.
All kinds of support down there. I don't know if you get a shot down there. But this is the kind of tape that could give you a shot. So obviously, if it gets down there, I think that's something I'd be interested in.
All right.
So 1 minute here, and balances have grown a bit, and they are, we saw the S&P rally a little bit. Balances just got heavier to the sell about 5 minutes ago, and the S&Ps took a little bit of dip on that. But if I look here, Berkshire Hathaway, 106,000 to sell. Baba's now 201,000 to sell. So selling balances doubled. Wells Fargo is now 796,000 to sell. It's enormous. It's trading in the 58 handle now. Bank of America, 892,000 to sell. It's grown as well. It's probably going to be over 1 million by the time I finish this sentence. GE, which is the eternal short, it seems like it just keeps going down. GE broke down. Let's talk GE just for a quick 10 seconds.
Spencer, did you hop in the GE yet or not?
No, today's the day.
Today.
719,000 this morning. It's down here again. That support was 1580. It took that out. I think the stock's going to see $15. I honestly do. And it may be, we'll see what happens, but I don't know. I think this is the next big high psychological whole number. I guess 1550 you could argue in the pre-market. There's probably a little, I'll look at the buck, but this thing's in breakdown mode here again. It goes down in an up tape. It goes down in a down tape. The thing just goes down. It needs some analyst to come out and defend it. Until that happens, the stock is just dead money. There is 500,000 in the book to buy 1550. But if I look further, $15, 1.5 million to buy at $15. So there's your next really big level of support. And you find a huge institutional buyer at 15. Somebody's backing up the value train there. But I don't know if this is still continues to be the value trap. Obviously, one of the most disappointing stocks I've held in my investment portfolio. I sold half of it last week ahead of the earnings report at $16.90. It seems like every time you sell, gee, it's the right move. I can't get on the GE train.
Yeah, you had that long consolidation just around the $16 level. Looked like it was going to hold. You had 1, 2, 3, 4, 5, 6 lows in that area, and then it took it out on Friday. Actually open right there. So if you were quick off the hop, you could have caught that 1560 close. Just keep an eye on it. If you want to stay out of trouble in here, I wouldn't be buying this thing until you get sustained closes over $16. All right, Dennis, a fun show today.
Well, one more thing just before, and this is what I want to say is there's some people, just talking, there's obviously, some people that have been making a lot of money buying the dip. And, that has worked for a long time. One thing I will say is today is a very important day. It is very important for this market to actually show some life. We don't want to see this thing close down the weakness again, because usually on the second day, in this last few years, we've seen if we've seen any type of sell-off, usually on the second day around 10:30, 11 o'clock, a half hour to an hour after the open, we see the market stabilize and then start to find a bid. That's what it needs to see today. If that does not happen, that is concerning. So let's see what happens around 10:30. If it follows suit with what we've been doing, and obviously the sell-offs haven't been as significant as they were on Friday, which makes this interesting. But let's see what they do. Let's see if the buy the dippers do come in here shortly after the open, and if they start to catch a bid, then maybe you think, okay, well, maybe it's going to be another buying opportunity. But if they follow through and just continue to sell here, and we close at the lows here again today, that is concerning.
And, just one just overall comment you made here, Dennis. A lot of traders, investors in our chat room, been trading the markets, have had successful strategies working. I think one thing you've always had is the ability to kind of like shift modes here. And I think if you're a newer trader in this, you're looking at this opportunity and you're saying, oh, I've seen this before. I buy the dip, just maybe to buy with half of your normal position or whatever your strategy. Markets are going to be moving more. The average daily ranges are expanding. It's a down market. You got overhead supply now in the S&Ps, which you haven't had in quite. We're over 130 points from the high here. So no matter how cheap you get something on a day trade and how good it looks for 50, 75 cents, just got to be cognizant of the fact that there are people that are long at much lower levels than you. And, if Fidelity wants to sell a couple million of something, it's trading at 112. Yeah. If it's traded at 112, they're not going to give an order to sell $500,000 at 112. They're going to say, sell me $500,000 down to 108. And they don't care what's in there. They don't care if they sell it down to 108, pops back to 111. That's their target. That's the price. That's where they went out. So, just play it close to the vest. And Spencer, you can preview tomorrow's show for us.
Right. Well, tomorrow's Tuesday, which means we're joined by Nick Shaheen, as we are every Tuesday. He's our options expert. If you want to catch any part of today's show again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher, or just rewatch the show on YouTube.com/Benzinga TV. Hope you all had a good weekend and a good Monday so far, and having a good rest of your day, and hope you join us again on Tuesday.